The tax file number declaration form is a standardised form prepared by the Australian Taxation Office that looks like this, and your employer should give you a copy to complete when you start a new job. Failing to complete it can lead to many problems for you, the employee, including being paid incorrectly. If there is a mistake in your pay, it won't be fixed until you lodge a tax return. This form is divided into two sections called Part A and Part B. Part A is required to be completed by you, the employee, and Part B is required to be completed by your employer after you have returned it to them with Part A completed. The employer will complete Part B and file the information with the ATO and will use the information in Part A to calculate your net pay after tax. Question 1 asks for your tax file number or TFN, which is a 9-digit number that you can apply for with the ATO online if you haven't got one already. If you do have one, you can find your TFN by logging onto your MyGov account and going to the ATO section and looking at your most recent tax return lodged, or any other correspondence from the ATO. Questions 2 to 7 are regarding your personal details. You should ensure that your response matches what you have provided in your most recent tax return to avoid common identification issues if you're required to speak or transact with the ATO in future. Question 7 is confirming what basis you are paid, which is related to your employment status or work mode, such as full-time, part-time, casual, and so on. For each employment basis option, the ATO requires different rates of tax to be withheld by employers to ensure enough tax is withheld, and takes into consideration the variability of hours worked into a typical pay cycle for each work mode. Choosing the wrong basis can mean the wrong method of calculating your tax withholding is applied to your pay, meaning you have either paid too much tax or not enough. If you're not sure of what basis you're paid on, you should check with your employer or refer to your employment contract. Remember, if your employment basis changes during your current employment at the same employer, you can complete a new TFN declaration anytime to update this employment basis, or any other details I mentioned later on. Question 8 is another important question and will also affect what tax rate your employer withholds from your salary or wage. This question is separate to your citizenship or visa status. For most people that have worked and lived in Australia for all their lives or for many years, the answer is most likely to be Australian resident for tax purposes. This means your employer will withhold at the lower marginal tax rates available to Australian tax residents only. If you have lived and worked overseas recently or are on a working visa, the answer becomes a little more complicated. Fortunately, the ATO has a helpful questionnaire that helps you work out your tax residency status based on your individual circumstances, and I'll leave a link in the description of this video to help you work this out. If you're still not sure on your tax residency, then you may need to consider paying for expert advice with a registered tax agent. Expert advice is particularly important if you own assets outside of Australia and are seeking to become a tax resident of Australia. If your tax residency changes during your employment, then remember you can always complete this form again. The remaining 2 questions are very important, particularly for younger workers, to ensure they are paid correctly and will make a big difference at tax time when you lodge your tax return. Before I cover them, please remember to hit the like button for this video, and also please subscribe if you haven't already for more content like this. Thanks a lot. Question 9 is referring to when you want to claim the tax-free threshold. Typically for Australian tax residents, the first $19,000 you earn each year is tax-free. The tax-free threshold may not apply to your salary if you are not an Australian tax resident, and there are different tax rates for non-tax residents. However, if you earn a salary or wage from more than one employer, claiming the tax-free threshold for more than one employer can lead to less tax being held than required by the ATO. You are required to claim this threshold for only one employer, and if this is your second job, then you should answer no. If you claim the tax-free threshold with more than one employer, then you will likely have a tax bill at the end of the year when you lodge your tax return, as your employers have not withheld and declared enough tax on your behalf. If you haven't claimed the tax-free threshold at all, then you will likely get a tax refund when you lodge your tax return. Question 10 relates to the employees who have entered into a government scheme to receive a subsidised loan or loans from the Australian government to pay for their higher education like university and the HELP scheme. If you have one of these types of debts, then you're required to say yes. If you answer yes and you reach a specified salary or wage set by law, your employer will automatically start to withhold more tax from your pay until you pay your debt off. If you do not answer yes and you do have a debt and you earned above the threshold, then you will be issued with a tax debt by the ATO when you lodge your tax return at the end of the tax year, which can be a big surprise for some. Once you have paid off your student debt in full, you can complete a new TFN declaration with your employer and change the answer to question 10 to no, and your employer will stop withholding extra tax from your salary or wages. Now, after you've answered question 10, sign the declaration and return it to your employer to finalise and update how much you should be paid. If you started a new job in Australia, then you would likely also have been given a Super Choice form that looks like this. The video suggested on your screen right now will help you complete the Super Choice form to make sure your future superannuation contributions are made to your preferred super fund, where you could avoid having a duplicate super fund set up for you by your new employer, and you can save big on fees and potentially get better investment returns.